Traders Corner is brought to you by IG.
Welcome to Traders Corner. As always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, if we were in a cricket match at the moment, I think you're hitting the singles at the moment, but quite nicely so. So let's start off with a recent trade. It was a short position that you took in Truworths. You've closed it out. Tell us what happened to that trade.
Yes, it's worked out quite nicely for us. The chart of Truworths is up on the screen at the moment. Just to recap what we did here, you can see that the stock broke out through this 100 Rand resistance level where that blue line is. So that breakout there is actually a bullish breakout. But we also know that from looking at the transactions in shares and what have you, it appeared as if this was a short squeeze that saw the share price push up. And it went basically from 95 Rand up to about 112 Rand, pretty much in a straight line without any correction. And typically when you see a breakout like that, very often you do get a pullback to retest the breakout level. And that's pretty much what we've seen here. And I took that based on the fact that we knew that the stock had gone up on a short squeeze, but also the fact that it was likely to pull back and retest that breakout area. I saw that as an opportunity to go short, and we did a small short position over here. We went short of 1,500 CFDs at 111 Rand 30. That was after I saw a reversal candle, what's circled over there. We call that an inside day. An inside day is where basically the open and close of a particular day's candle is inside the prior day's opening and closing. It indicates a level of indecision between buyers and sellers, and very often that these inside candles do happen at the end of a trend, be it at the end of an uptrend or at the end of a downtrend, and it is often a reversal candle that indicates a turn in the trend. So in this case, we saw that as a reason to go short. The stop loss was 113 Rand here, and I was looking for a move back down to 100 Rand, which is where this blue trend line is. Now, I suspect we might still get that move down to 100 Rand, but what happened last week, in the middle of last week, we got a fairly bullish reversal. It's like a bullish hammer pattern, we call it over there, where the share price closes on the high of the day. And I thought to myself, you know, quite honestly, this consolidation, this pullback has been rather controlled. And if I look at that chart just in isolation without considering having a short position on at the moment, I would actually look at that chart and say, well, that actually is almost beginning to start looking quite bullish now, because it's starting to pull back towards this 100 Rand support level. The stochastic is beginning to get towards oversold territory now. So on its own merits, I would almost actually look at that chart and say, gee, it could almost be time to look to start buying this with a view to going long. And in that, if that is the case, then of course I don't want to be short. So I decided to exit the trade prior to it hitting our target level. So I cut it at 103 Rand and 20 cents. And that still had yielded a pretty good result for us. We made 11,500 Rand out of that trade. So I'd say this is even a little bit better than hitting singles. I think this is almost hitting a 4, I think. Certainly in the context of how we've been trading this year, this is one of our bigger profits this year. So it's worked out quite nicely. As I say, I think there's a chance it maybe still does come down to 100 Rand. I mean, you can see with these long tails to the upside over the last few days, there is selling pressure at the higher levels still, but I'm not going to be greedy here. I'd rather take that profit and be done with it and move on.
Would you actually look to implement a long position on Truworths if it gets to looking fairly tasty? It's
possible that I could, maybe, because this 100 Rand area is now quite strong support. You've also got your 50-day moving average just beneath it at about 98 Rand. So I think all in all, if it does come back towards that sort of area and reverse up convincingly from what would then be pretty oversold conditions, I think that very well might actually line up an opportunity to go long on this stock.
Okay. All right, as you say though, more than a 1 or a 2, that's a pretty chunky little profits for not a particularly big trade for the portfolio. So congrats.
Yeah, not a particularly big trade, and also we didn't have to hold it for a very long time either, which is also helpful.
Okay, guys, so leading us or teeing us up to this week's trade that you've taken for the portfolio, we'll start, as we often do, with the bigger picture and the S&P 500 index once again.
Yeah, so we've got the S&P 500 here, and as I've said in many weeks, in many shows in the past few weeks, we've got this resistance zone up at about 2100 here on the S&P 500. Now, what's notable is that the market did trade up into that index, into that area in the middle of April, and it's since been pulling back. And we've been trading down at about 2050 or thereabouts on the S&P 500 now these last couple of days. What I've pointed out on previous shows is that there's this negative divergence evident, which is where your RSI, in this case, your relative strength index, makes lower highs, all the while the price is making higher highs. And that is really just an indication of a decline in momentum. So we know that this index has been moving higher, but it's been moving higher with declining momentum. And when you see that declining momentum, which is indicated by the negative divergence there, that is very often a precursor to a change in the trend. And so far that's working out. We've got the change in trend that's happened definitely over the last 2 or 3 weeks. You can see the S&P 500 has been trending lower. But now the question from here is, where do we go? Because there is an area of support here which comes in at around about 2040. And I think what we possibly see here is a little bit of a bounce from these levels. Certainly that's what has happened over the last 2 nights for the S&P 500 anyway. But then it's going to be very, very interesting to see how the trading pattern follows through from here. There's a little bit of resistance at about 2075 on the S&P 500. Now, if this index were to go up and then falter at that 2075 level, there's a possibility that it maybe makes the right shoulder of a bigger head and shoulders pattern there, which would be bearish, and that would then potentially project us down, down here towards 1950, somewhere there. But anyway, look, I mean, I'm not predicting that because I don't know. I'm just saying these are the sort of things I'm going to be watching for on the chart of the S&P 500 in the next week or two. And do keep in mind that we are into that sell in May, go away period of the year where things can become a little bit bumpy.
Okay. Garth, what's it looking like on the top 40? Because we've also had, after a couple of days, well, last week was pretty peaky, and I don't mean that as in peak, I mean that as in pretty iffy. Today has actually been quite decent. So are you seeing a similar sort of pattern developing on the top 40?
It's a little bit different here. This is the same top 40 chart that we looked at last week in terms of the levels that I wanted to highlight. What I mentioned last week was that the market was beginning to turn lower, and it looked as if we could come down and visit this 45,000 support level. Now that 45,000 support is important because it represents the highs that we saw in mid-February, and then it also represents the swing low from early April, and now we're once again testing that level again. So it's quite a meaningful lateral support level. And what it seems to be happening today is that we look as if we are reversing up off of this 45,000 support level. So if we do start to see some follow-through from this support level, follow-through buying, then there's a possibility that we might see a little bit of a bounce. And again, I mean, I said on the S&P 500, there's a chance now that we see a small bounce, but we need to see the quality of that bounce in terms of future direction. On the top 40 here, I think there's a chance we get also a small bounce. And who knows, maybe we get something similar to what happened here in the beginning of April, where we've seen a couple of days of sort of base building, and it begins to perk up and move a bit higher. And maybe we get the same sort of situation unfolding here. So on that basis, that's what actually tees us up for this week's trade on the show.
Okay, which is a short and nifty little long position using a particular instrument. So talk us through it.
Yeah, so the instrument that I'm using to do this trade is the IG Markets SA40 CFD, but specifically it's the 2 Rand per point CFD. Okay. Now, just to put the viewers into so they understand this actually represents the SA40 cash index. In other words, that previous chart that I showed you of the top 40 index, that's the spot index. This SA40 cash product mimics the top 40 index. But you can trade it with a small contract size, which is only 2 Rand per point, all right, which is a nice small size of trade to take for a beginner. Because historically, we've always had the top 40 futures, which is 10 Rand per point, which is a big exposure that you take. Because if you think about it, with the market currently at, say, 45,000, a 10 Rand per point futures contract means that you're taking 450,000 Rands worth of market exposure just on one contract. Now, what's nice about this IG top 40 product is that it's only 2 Rand per point, so it's a much smaller product. It's 20% of the size of a normal top 40 future, so it lends itself towards smaller traders who want to get some exposure to the top 40 without having to take a massive exposure. And the other really nice thing about this is that it trades 24 hours a day. So IG Markets have an algorithm which runs through the night when our spot market is actually closed. They've got this algorithm and then tracks the US markets and tracks the Asian markets and sort of makes a bit of a calculation as to where the top 40 would potentially be trading if it were actually open for trade in market hours.
Sounds perfect for insomniacs.
It is. You can sit and watch it all night.
Especially if the trade's working against you, because I imagine that does happen.
Well, that probably causes insomnia, I would imagine.
Okay, Garth. So it's a smaller instrument. Well, talk us through the mechanics of this one.
Yeah. So what I've done with this trade is I've actually gone long this morning for our portfolio, because here's that 45,000 support level that I spoke about on the bigger chart. Just keep in mind, by the way, this is a 1 hour graph. And this, what you see on the screen here is actual screenshot from my IG Markets web trading platform. So there you can see I've selected the 1 hour time frame, and various other technical indicators and things are displayed here as well. Anyway, I saw this morning, and now this was also very, very early, I saw that it tested 45,000 twice. It then started to bounce up, and then it actually broke through this area that I'm highlighting with my mouse cursor over there. That's at about 45,200. Now, strictly speaking, when you see that, that's like that W formation I've spoken about on the show before. When it starts to break up above the middle of the W type of thing, then that kind of confirms that we've got a double bottom in place, and then that projects further upside. So I went long this morning, and I did this early. I did this at about 5 a.m. this morning, just after I'd woken up, which I suppose lends credence to the saying, the early bird catches the worm.
Oh, gosh.
Just don't be the early worm, because what's the other side of the saying? The early worm gets eaten.
Yes.
So if you're going to be on any side of that equation, you need to be the early bird. Anyway, I went long of 2 of these top 40 contracts. So it's 2 Rand per point times 2. So that's 4 Rand per point effectively exposure that I've taken. I went long at 45,240. And I'm going to use a stop loss here of 44,900, which would imply that it then needs to actually break below the bottom of this 45,000 support area.
Okay, so that's quite well, that gives you quite a lot of leeway, doesn't it? And especially in a fairly volatile market.
It gives me some leeway. Look, 340 points is what it is, which is about 0.75% on the top 40 index. So it's not that much leeway. It's actually relatively tight in the world of the top 40. But the thing is, what I like here really is the technical structure. The fact that it's bounced off that 45,000 support quite convincingly. It has begun to move higher throughout the morning now, and it's looking good. So I suspect we might have a bit more upside here.
And then just in maybe a little bit further detail on your exposure and your target as well.
Yeah, so we've got, as I said, I've done 2 of these contracts, and they each trade 2 Rand per point. So it means I'm effectively long 4 Rand per point at 45,240. So just putting that into exposure terms, it means my total market exposure is 180,000 Rand that I've gone long of here, which is a nice size. It's not too big and it's not too small. My stop loss is 44,900. My risk here is 340 points. That's the difference between where I've gone long and where my stop loss would kick in. So 340 points multiplied by 4 Rand per point gives me 1,360 Rand as the capital at risk. And that equates to just under 0.5% of our total disposable capital. So it's a really small risk that we're taking here.
I mean, is it worth it putting on such a small, I suppose, trade?
I think it's worth it. I mean, in line with your introduction, we've been hitting singles, and if this trade works out, certainly we're not going to make a killing out of it, but we'll hit a single. And in this game, hitting singles, they add up over time. So I'm quite happy to, if this really works out, maybe we make 4,000 or 5,000 Rand out of this trade. But it's 4,000 or 5,000 Rand that we didn't have before, which is great. And if we go wrong, we lose 1,360 Rand. It's not a big deal in the life of this portfolio. In terms of the target, I don't really have a target yet. I'm going to continue to look to run this until I see some clear evidence of a downside reversal. Part of the reason for that is also, do keep in mind, I've still got our options position in the background. And if the market runs up through 47,000, where I'm short of some call options, I'd then rather be a little bit hedged, which this effectively gives us that hedge.
Okay, so that's the trade for the week. Garth, what does the portfolio look like?
It's looking good. We're up a bit more this week. We're up 11.3% for the year to date. So you can see we've got 278,000 Rand in the kitty. These are some of the recent trades. The Truworths I mentioned, we banked 11,500 Rand profit over there. We've still got this option structure working in the background, and that'll run out until the June futures close out. Yep. And then this SA40 position we've just put on this week, 2 contracts at 45,240 we long, and we are up. We're in the money about 1,440 Rand on that.
Okay, long may it continue. Garth, then to end off with courses this weekend.
Yes, so I've just been down in Joburg this last weekend. We had a good run of courses up here, and then in Cape Town I'll be down there this weekend on Friday and Saturday. So 13th and 14th of May I've got courses down there. Anyone that would like to attend either of these courses, please email me, garth@traderscorner.co.za, and I'll send you all the details.
Great, Garth, we'll leave it there as always. Thanks for joining us. Garth McKenzie is founder and editor of Traders Corner.
Traders Corner is brought to you by IG.